Hi everyone, welcome. Congratulations on taking this step to learn how to make the money to transform your life. I want to thank you for giving me your most precious gift, which is your time. This video will be starting at the very beginning, which I know for some of you may be real boring, but please bear with me because in order to build anything, you need a foundation. And that's exactly what this video is about, the basics. Some of you may not know or may be asking, just what is a lien? Well, quite simply, a lien is a claim to attach real or personal property to satisfy a debt. The typical order of liens on real property is first mortgage, a second mortgage, a secured home equity line of credit, an IRS lien, and then a mechanics lien. However, because county tax liens have been around since before the beginning of our country, they have seniority over any other liens. At this point, some of you may be asking, okay, but is investing in tax liens and deeds a safe investment? The answer is yes. State law dictates the terms of how the auctions are conducted by the counties, and all liens are backed by the underlying property. When you own a tax lien certificate, you become the lien holder of record with the county, and your lien has priority even over a mortgage. You can think of it as a bank CD where you get your principal back along with the interest rate that is attached to it. The big difference is that instead of receiving 1 or 2% in your money, you can receive 12, 24, or even as high as 50% interest. And your investment is backed by the underlying property that the lien is placed on. Not a bad deal, right? If the owner doesn't pay their back taxes and the interest, you get the ability to take the title to the property. Now that actually doesn't happen very often because the vast majority of property owners can usually find some way to come up with the money. But it does happen. So here's how it works. Once the property owner has not paid their taxes for 1 year, the county puts a lien on their property. If he puts a lien on a property, the owner has a certain amount of time to pay the back taxes, interest, and any penalty to retain their property. Now this is called a redemption period, and every state has a redemption period, and they usually range from 6 months to 4 years, depending upon the state that the property is located in. Now before the property goes up for auction, all parties who have a financial interest in the property are notified of the pending sale. These parties then have the option of paying the lien to keep their interest in the property. So right now, some of you are probably asking, there is a mortgage on the property, won't the bank pay the back taxes? Well, yes they will, because they would take a significant financial loss if they did not. But over the last few years there have been hundreds of banks that have gone out of business and many others who have bundled their portfolios of subprime mortgages and then sold them off to Wall Street. Yeah, we know how well that worked, right? These financial institutions may not even know where or who currently owns the mortgage. Another question beginning investors always ask is, if these are such good investments, why isn't everyone doing it? The answer is that there's no incentive for Wall Street, insurance companies, or banks to educate you about this opportunity because there's no commissions for them involved. And I know because for years I was a licensed stockbroker and at no time was tax lien or deed investing spoken of because there's no money in it for us. But did you know that banks and insurance companies are some of the largest investors in tax lien certificates? The reason is that they can lock in these awesome rates while they're using your money. And to add insult to injury, then they pay you 1 or 2% and pocket the difference. Well, the next step in the process is that the county is required by law to place notice in public access areas such as the local newspapers. And they usually do this for 3 consecutive weeks, giving notification of the sale. And this is where you, as the investor, comes in. Now the first thing you need to know is the rules of the particular county you wish to invest in and how they conduct their auctions. Now there are a number of different types of sales, and I'll start with straightforward lien and deed sales that are sold on a premium basis. This means that the lien or property goes to the person who is willing to pay the highest amount to the county. These auctions begin with what is called a minimum bid, which includes the amount owed in tax, any interest, penalties, and foreclosure costs. They may also include the cost of preparing the documents, excise tax, and recording fees. Another popular format is bid down the interest rate. Here, the amount of interest that a bidder is willing to receive on a lien is bid down from the maximum allowed to whatever that bidder will accept. Then there are more exotic sales like redeemable deed sales, where a deed may be redeemed by the owner for a specified period of time after the auction has taken place. In that case, you're paid back your principal plus a specified amount of interest or a penalty for the owner to be able to redeem their property. These happen in states like Texas, where the redemption period is usually 6 months, and the owner is required to pay you a 25% penalty. One of the cool things about Texas is that you can take immediate control of the property. You can move in, rent it out, or do any improvements necessary to the property. And if the property is redeemed, they must pay you back for the improvements on top of the penalty and your original investment. In Georgia, which has a 1-year redemption period, there is a 20% penalty for the owner to redeem their property. Now, where else are you going to get these types of returns on your money? Not from the banks or insurance companies, that's for sure. For you, the investor, the upside is, if they don't pay their tax bill, you have the opportunity to get the property for the amount that you have paid the county at the auction. Those prospects excite you? They sure do me. Then there is the sealed bid format, where the county opens, as it says, sealed bid forms and selects the highest bid as the winner of that property. Some counties do a Red Robin style auction, where each person attending the auction is asked in turn which liens they want to purchase. That can be very interesting, don't you think? In some counties and states, property that is not sold at the auction are sold to the public in a process called over-the-counter sales. These properties are purchased without bidding, and they're usually sold on a first-come, first-served basis. Then there are sales called scavenger sales, which happen in Illinois every other year on properties that did not sell at the auction. And then there's also commissioner sales, which are properties that have not sold in at least 2 auctions. Another format is bid down the percentage of ownership, where the bidder will accept an amount or percentage of ownership less than 100% on the property. This is not my favorite format. I don't know about you, but I sure wouldn't want to be a partner in a property with a person who did not or could not pay their taxes. Next, you need to know when the auctions are held and whether it's a live auction, meaning that you have to go there to attend, or do they have the auction online. If they're online, you can participate from anywhere in the world you have internet access. And you can invest from the comfort of your home and even in your pajamas. What a way to make money, huh? Once you know when and where the auction is to take place, you need to find a couple more things. Like how and when do you register for the auction? Is there a deposit required? And if so, how much? What form of payment do they accept? Some counties will only accept cash, while some will not accept cash at all. Some will only accept wire transfers, but some will even take your personal checks or credit cards. Then you need to have to figure out when that payment is due. Did you know that some counties will allow you up to 30 days to pay, while others will even finance your investment? And the last essential is to find out if there are any special rules or items you should be aware about. So now that you know what a lien is and what the major formats are, the next step is to get a list of the properties that will be presented in the auction. The counties usually have one office that will conduct the auction. In most cases, it's the office of the treasurer or tax collector, but in other states, it's the office of the clerk who conducts the auction, and in some counties, such as Texas and Ohio, the sheriff's office conducts the auction. In Texas, most of the work is farmed out to law firms that will send out the notices and prepare the documents. Now, there are a lot of counties that now even post their lists on their websites. And some of them will even sign you up and send you email notifications about their upcoming auctions. Well, my friends, those are the basics. Now that we have those covered, we can move on to the exciting part. It's how you make money and get paid. Now that's the part that really excites me. How about you? When you do this, you take personal control of your financial situation. With this business, you'll be moving from a job-based economy to a results-based economy. You get to write your own ticket. Pretty cool, huh? So here's to your success, and I'll see you in the next video where we talk about how you get paid.